So, you want to own a waste management company. Most people think owning one means buying a truck, driving a route at 5 in the morning, and getting paid to haul away things nobody else wants to touch. That part is roughly true, except before any of that, you need to understand something the waste industry almost never tells aspiring owners. According to the Waste Business Journal, the 4 largest waste companies in America, Waste Management, Republic Services, Waste Connections, and GFL Environmental, now control roughly half of every dollar spent on trash disposal in the United States. You are not entering a fragmented mom-and-pop industry. You are entering a market that has already been consolidated by companies that, in many cases, own the landfill you will eventually have to pay to use. Let's talk about what it actually costs to get in the door. A new rear-load garbage truck runs $150,000 to $300,000, according to Sage Advice's 2026 Startup Breakdown, while a used one can be had for $50,000 to $100,000, depending on age and mileage. If you're going the roll-off dumpster route instead of residential collection, expect a similar range for the truck itself, plus $3,000 to $8,000 per container, according to Happy Can Dumpster Rentals' 2025 cost analysis. And a lean operation needs at least 10 to 15 of them just to keep jobs moving. Layer on permits and hauling licenses, which Curb Waste puts at $5,000 to $25,000, depending on your state, commercial insurance running $15,000 to $50,000 a year, and 6 months of working capital to survive the gap between your first invoice and your first payment. All in, a realistic small to medium operation costs $200,000 to $500,000 before you've hauled a single load. That is not a side hustle. That is a second mortgage with wheels. So the question becomes obvious. Why would anyone sink $500,000 into trucks and steel boxes to compete against companies that already own the landfill? Here is the part that catches almost every first-time owner off guard. You're not actually competing with Waste Management on price because you're not trying to win municipal contracts. The real business model for an independent operator is asset utilization math, and it looks almost identical to the throughput game other capital-heavy businesses play. Once you've bought the truck and the containers, your marginal cost per additional job is small, mostly fuel, labor, and the landfill's tipping fee. Everything above that is close to pure margin. According to franchise disclosure data from Been There Dump That, the median truck completed 617 jobs in a single year and an average revenue of $418 per job, which works out to average annual revenue per truck of roughly $273,595. That number is not a fluke. That number is the entire business model. A dumpster sitting empty in your yard earns nothing. A dumpster sitting on a job site for its full rental cycle is earning every single day, which is why the operators who win in this business obsess over turnaround time and routing density, not marketing. And because this segment skips municipal fixed route contracts entirely, margins run 20 to 35%, according to Happy Can's operator data, compared to just 10 to 20% in residential collection, where you're locked into low, city-negotiated rates. Meanwhile, the landfill gatekeeping that seems like your biggest obstacle is also quietly protecting you, because that same $62.28 per ton national average tipping fee, which the Environmental Research and Education Foundation's 2024 report says climbed 10% in a single year, is scaring off casual competitors who don't understand disposal costs well enough to price around them. Now for the part the industry brochures leave out. Administrative and waste services businesses fail at a rate of roughly 24.3 to 25% in their first year, according to LendingTree's 2026 small business analysis and BLS-derived industry data, worse than the 22.1% national average for all new businesses. One widely cited figure puts the 5-year failure rate for waste services as high as 37%, though that number is considered an overstatement by most operators, since it blends together everything from single-truck junk haulers with no insurance to failed municipal contractors, categories with wildly different survival odds. Strip out the noise, and 3 to 4 causes show up again and again. First, undercapitalized owners buy one truck with no backup, so a single transmission failure means zero revenue for 2 weeks while the loan payment still comes due. Second, operators underprice jobs against a landfill tipping fee that keeps climbing. Private landfills now charge 17% more than public ones, according to EREF's data, which means a pricing model built on last year's disposal cost quietly erodes margin every quarter. Third, permit and regulatory compliance gets treated as an afterthought instead of a line item, and a shutdown for non-compliance can wipe out months of cash flow instantly. Fourth, and most common, owners finance too much equipment too fast, chasing growth before the routing and utilization systems exist to actually keep those extra trucks full. So, let us run the actual numbers on two realistic versions of your waste management company. Option 1 is the lean owner-operator roll-off business. You buy one used hook-lift truck for $80,000, 15 containers for $5,000 each for $75,000, spend $20,000 on permits and insurance, and hold $30,000 in working capital, a total investment of roughly $205,000. Running at the industry median 617 jobs a year at $418 per job, that's $256,000 in annual revenue. At a 25% net margin after fuel, tipping fees, maintenance, and a part-time helper, you're clearing roughly $64,500 a year before debt service on your equipment loan. It's a real income, but it's closer to a well-paying job than an empire. Option 2 is the scaled operation. 5 trucks, a mix of residential and commercial roll-off accounts, and a dispatcher managing routing instead of you doing it yourself. Total investment lands around $1.3 million, financed heavily through SBA and equipment loans. At 5 trucks, each pulling roughly $270,000 in annual revenue, you're looking at $1.35 million in top-line revenue, with scale efficiencies pushing margins towards 30%, better fuel contracts, better tipping fee negotiations, less idle container time. That's approximately $405,000 in annual profit before debt service. And the ceiling is real. Biz Buy Sell listings for established roll-off operations show businesses generating $4.39 million in annual revenue with $1.22 million in EBITDA, the kind of numbers that come from a decade of routing density, repeat contractor accounts, and a fleet running near constant utilization. So here's the truth underneath the truck engines and the tipping fees. The same barrier that keeps 4 companies controlling half the American waste market, hundreds of millions in landfill capital, permitting that takes years, environmental liability most entrepreneurs can't stomach, is exactly what protects the smaller, disciplined operator who never planned to own a landfill in the first place. You're not trying to outscale waste management. You're renting steel boxes to people who need somewhere to put their debris in a market too capital-intensive and too regulated for casual competitors to flood. Not bad for an industry that most people only think about once a week, on trash day. If you found this video interesting, please like and subscribe.